in India. And Adrian, thank you so much for taking the time out and joining us and being patient with us. Now, what do you make of this? Because, you know, the sense that we got in the run-up to the Fed meet was that markets were hoping for the Fed to make a move because it would reaffirm the Fed's belief that growth is there in the US, and that is something that the world needs at large. We need the US to show confidence in growth. Somehow that hasn't happened. What are the implications, Adrian?
I think the direct implication is that the recovery in North America doesn't quite have the strength that many people expect it to have, or the Fed expects it to have, and will defer this decision for the next round of consideration. Indirectly, what we've seen over the last 3-4 years is that when there has been positive reinforcement of a recovery in the US, there is usually a flow back into the North American markets, equity markets in my case, which would usually mean outflow from the emerging markets or from Asia or from India. And perhaps those kind of pressures will not be so strong given the Fed's announcement earlier.
That will probably happen at some point of time later, Adrian. What do you make of the commentary? Because I was listening into the press conference and Janet Yellen made a clear reference to two things. One, that until growth comes back at a sustainable level and until inflation hits that 2% mark, the Fed will not make a move. So it's a push down the road. How do you think markets do until then?
Well, that's very difficult to call. A lot of people, when they look at the global capital flows and the expectations of a recovery, the single most important thing people put their hopes on is a North American recovery. So given that that's been pushed back a little bit indefinitely, I think that most of the global market players or asset allocators would be quite uncertain, and in this uncertainty there could be some volatility, but it's difficult to say where this volatility would go. As you know, and as some of you viewers might be aware, we pick stock rather than watch for macro or liquidity moves and try and anticipate that. So from what we do from the perspective as stock pickers, this volatility is a good opportunity for us to perhaps buy and sell things that aren't so fundamentally grounded based on movements on macro indicators that have come through so far. So from our perspective, we are quite sanguine, but we understand that most capital allocators will continue to remain uncertain at this stage.
And where is the trade then, Adrian? I know you pick stocks and we'll come to that as well. We'll come to the India story. But just broadly, if the markets were a stock, is the trade firmly in the favor of the developed markets, or do you believe selective emerging markets like India probably stand to benefit a lot because of a lot of other factors over the course of the next 6 to 12 months?
Well, 6 to 12 months is a relatively short period of time in our books. And I think most traders think in far shorter time frames than that. Fundamentally, you have asked a biased person. I believe that the emerging markets, I believe that Asia's fundamentals remain very strong. Balance sheets are not stretched at the corporate level or at the country level or at the household level. And we've seen a lot of the excesses in some of these sectors being ironed out in earlier periods of difficult liquidity. So I think that if you're selective about which stocks you hold, I'm firmly in the view of the emerging markets and Asia as outperforming the developed markets from here over the long term.
Adrian, hi, good morning. Since you've been such a bottom-up guy and the fact that we've slid, almost 13% from the top for Indian equities, tell me, what is it that you've got out of, and have there been any fresh purchases that you've made, stock-specific?
No, actually, we have kept the faith in most of our stocks. Within the Indian universe, there were periods of trimming. We trimmed some of our banking stocks about 4 or 5 years back when we felt that there was much better value in the private sector space, better credit control disciplines among some of these banks. So we gravitated towards some of the better run banks in India. So in the Indian space, we have trimmed ahead of these kind of volatilities. Now we do see that in the banking space, there are certain points of stress, and that stress is expected to continue for a while. But you know, global macro trends don't dictate our individual stock picking movement so much within the Indian stock picking universe.
So you've not added any of the banking positions in the recent fall?
No, actually, we've added to the ones that we already hold. So stocks like Kotak Mahindra, stocks like ICICI Bank, HDFC Group. We have been picking up stocks on some occasions during the weakness, yeah, but not been adding new names.
You know, it's interesting to see, Adrian. I know you're a long-term guy, but you still have almost close to a 2% holding in Nestle. Has the recent Maggi controversy in India not sort of receded your faith in the prospects that Nestle is going to bring about? Because it's a huge dent that they're going to face because of the Maggi mess.
Yeah, it has been quite embarrassing, but you know, they are committed to sorting it out. India is an important market for Nestle, and Nestle is committed to its presence and its brands and its people and its employees in India, so it wants to do the right thing. So you can see that with some movements in the senior management team and its recommitment to making sure that they do right by the food regulators, I'm sure it would bounce back. It did soften for a period of time, but we did not reduce our position within the Nestle exposure. And now that it's recovered, yeah, I think it's a position that we would hold for the long term.
I don't know if you've tasted Maggi or no, but we are hoping for the product to come back to the market sooner rather than later. But you know, I just want a quick word, Adrian, from you. I'm just taking the clock back to banks. There is talk, not confirmed at all, about there being a possibility maybe that the FI investment limit in certain banks or the private sector banks could actually be nudged up as well. If that were to happen, would you be an aggressive buyer? Because right now, the stocks that you like, the HDFC banks and the ICICI banks of the world, don't have much headroom. If the headroom opens up, irrespective of the valuations, would you go out and be an aggressive buyer in some of those private sector banks like HDFC and ICICI?
It would be encouraging for us, but we don't make trades based on things like that. What the mechanism now that currently exists is that you pay a premium over the quota limits that are imposed on FIIs. So we would look at the premiums, and if the premiums are too much, we don't buy. Given that these limits might change and allow a greater free float for FIIs, that premium might fall, and if it gets to a valuation that's attractive, we will buy. So it's on a case-by-case basis. We wouldn't speculate or take a position because we expect the FII limits to change in the near future.
You have select positions in the IT space in India as well. I mean, even in small cap or mid-sized names, you have quite large positions as well. What are your thoughts on Indian IT? Because it's a global sector, doesn't depend on the economic recovery. And if the world is facing some economic gloom, so to say, I think the first port of call is going to IT companies to reduce the costs as well. Is it a sustainable theme, the Indian IT space?
I think it's sustainable. I mean, we've seen those headwinds buffeting the developed markets for some time, developed world for some time. And you are right, TCS, Infosys that we do hold have got big customers, important customers in North America and Europe. But, you know, look at Tata Consultancy. Their numbers have been very strong in spite of the very soft global environment. So I think it's a service that is important, and you give good value for the price that you contract with and deliver on a timely basis, people will come. I think for sophisticated services, such as the software engineering, yes, people are sensitive to the price point, but people will appreciate a fair price. And if you deliver on the quality of your contracts and what you agreed to do, people will come back.
Adrian, it's interesting to see that Infosys and Mphasis are the only two IT names. Are you looking at any fresh positions anywhere within mid-cap IT, or would you stick it by with these two names?
We have 4 stocks in the IT space. Okay. There's Tata Consultancy, Infosys, Then we have the HP owned Emphasis, and we have TCS owned CMC. So those are the four stocks that we hold.
I'm just looking at some of the auto names, and your largest holding within auto continues to be Hero MotoCorp, almost about 6.5%. At the other end, ancillary, Bosch. It's surprising to see, Adrian, that at a time when just everyone in the world is going gaga about Maruti Suzuki, that's not in your portfolio.
Well, the two-wheeler space is a more disciplined place. You've got three major players in India. The four-wheeler space or the car space is a lot more competitive. Maruti is a great company. We look at it regularly. But in terms of the automotive market dynamics, I think Hero is the place where we want to be for now. Doesn't mean that we wouldn't buy Maruti, and doesn't mean that if we bought Maruti, we would sell Hero. But you know, it's a sector that's growing, especially in India. But we have to watch the four-wheeler competitive space very carefully because there are a lot of foreign players in the four-wheeler space. There are a lot of very effective local players as well. So there's a lot more competition there.
What about Tata Motors? Have you looked at that one? Are you willing to buy it? I mean, agree there are China problems, that there would continue to be, but that's a sizably smaller market for JLR, and the valuations are extremely compelling right now.
Well, Tata Motors fortunes are not just limited to the Tata brands, it's also limited to the foreign brands, the global brands. And a lot of those fortunes are also limited to Chinese demand, which has been very soft over the last few quarters. So that does dent Tata Motors' attraction in the short term. But they do good work. They have strong car brands at all price points, or many price points. And over the long term, as companies grow and as Tata Motors grows and offers a global product, unfortunately, you will be exposed to weakness in the global markets. And Tata Motors, in this case, is exposed to a weak Chinese auto market.
Adrian, a lot of people would be interested in knowing where is it that one of the largest investors in India is looking at fresh opportunities in the broader market space. There is only a 50 stocks in the Nifty 50, so you can only buy as much. What about the broader markets? Where do you see fresh opportunities?
Well, we don't pay attention to the components of the Nifty or the Sensex or the MSCI. We just buy whatever looks interesting. You know, and we just buy at whatever market cap points at whatever size that looks interesting to us. So we're not benchmark range bound, and the Indian market is deep. It's thin in certain areas, but it's pretty deep. So we haven't been adding new names this year so far, but last year we added things like Kotak. In the last 2-3 years, we've been adding some smaller mid-cap ideas that were interesting and some large ones too. So in terms of the large cap space, we added Kotak, we added Sun Pharma. They were interesting to us. Sun Pharma we used to hold in the past, but valuations got a little bit too exciting and they had some headwinds. So we reduced our position there. Given that they have recovered some of their practices, we have been building to that portfolio position. In the small cap space, you know, there have been interesting ideas that have come out, things, not new ideas, they've been around for a long time. Groove Finance is a company that we like very much. It's not cheap, but a very good company, very well run, very, very focused. So, you know, you don't have to be limited to benchmark stocks. There's a lot of things out there in India to buy.
What about, so you've given me some flavor of what you like. In the financials, you like Kotak Bank, you like Groove Finance and the HDFCs of the world. What about the state-owned enterprises, Adrian? Are you touching them at all? Because they were the flavor when the Modi government came to power. Somehow, some of it has lost its sheen as well. Are valuations or a bottom-up story in any particular state-owned enterprise compelling, is looking compelling enough?
Well, the state-owned enterprises, it's difficult to judge or assess the very wide pool of state-owned enterprises. There are so many variations out there, so many different sectors. So I would hesitate to generalize. There are some state or government-owned entities that we do like that are run very well. I'll just give you two examples in point. Container Corporation is very well run. We like what they do in the freight space. We think they do it very well, and they work with Indian Rails very closely, so we like that space. We like another stock that's interesting to us would be GAIL, that we have held a long time past. It's come through some difficult headwinds, but from a valuation perspective, I think it's something that people could consider. And those are two names that we've held for a long time before Modi came in. So although some of the things you say at a macro level are interesting, we tend to judge and assess companies based on their track record, and that's far more compelling than some of these rule changes. We try and buy companies that are apolitical, that will do well whoever's in charge, whoever's in charge in the state, whoever's in charge of India, whoever's in charge in the regulatory space. We like companies and businesses that are resilient to policy.
So, Adrian, by that logic, would telecom be a no-no? Because that continues to be marred with telecom, sort of policy hurdles, even though a lot of it has been cleared, but intense competition, pricing pressure, these continue to be sort of foreseeable headwinds, if I may say so.
Yeah, you're right. Those are the concerns that we have. We have Bharti Airtel, and we have Infratel too. Infratel, we like the tower space, the asset-rich, strong yield case, where it feeds into a group of telecoms players, not just Bharti. And then in the Airtel space, we've seen some good numbers and some very strong execution in the domestic area. So its markets and presence in India has been strong. Africa, it's holding steady. So yeah, you are right. Those are heavily regulated environments, but there's some very good companies there as well. We don't have a lot in either companies, but we have a little bit. Yeah.
Adrian, so just trying to understand, you've given us a slew of names. Tell me, where all have you added positions within existing stocks in the recent fall that we've had in the last 2 months, thanks to the China impact?
We haven't been doing very much. We've just been buying a little bit here and there from our existing names. We have not added new names in the last 8 months. So we haven't really been looking at things, putting to work money in things outside the old names that we have. But you don't have to have a new name every month, every quarter, every week. I think there is you need to keep an open mind. You need to see new companies. You need to see companies that you don't hold on a regular basis to make sure that the investment thesis is as attractive or not as attractive as you thought it to be. You need to test this hypothesis all the time. But often you get an excitement for a new name that's disproportionate to, and you get that bias for a fresh new idea when some of the best ideas you may already hold. So I think it's very important to be aware of that bias and not to overreact to new names.
I know we are overshooting our appointment, but last couple of questions really before we let you go. There are 3 or 4, actually maybe more, gruesome sectors within the world and within India as well. Commodities are a strict no-no for almost anybody because of what's happening to China. Would you be a contrarian and go out and selectively buy commodity stocks based on the bottom-up fundamentals that they are showing within India?
Within India, given the regulatory environment, given the difficulty in getting the licenses, approvals, and the softness in the market, and the track record historically, no. But we are a contrarian within our regional funds. So we have Rio, we have BHP, and you're right. It's a contrarian call in a market where no short-term or medium-term investor would be very keen on commodities exposure. But these are strong companies, good cash flows, solid balance sheets, very good management teams. So yeah, on that basis, we have quite a decent position in those stocks.
Imagine you're actually saying that your basic theme is apolitical, so probably these would be a no-no. Final question from my end, Adrian, and that would be on on pharma, because you mentioned Sun Pharma passingly when we were speaking about it. That's the largest pharma theme, yes. But a lot of people talk about how a lot of mid-sized or the second-rung pharma companies in India hold a lot of promise. They are tomorrow's large caps, even if they are today's mid caps. What within the pharma pack within India, aside of Sun Pharma, do you like, if you like anything?
We hold Lupin, but you could say that that's a large cap as well. We've been keeping track of the small cap and the mid cap space, but the pharmaceutical sector is a difficult one. It's a little bit like upstream exploration in oil and gas. There's always a lot of promise, but many people don't make it to a scale or a size that would give us comfort, or diversity or geographic dispersion that would give us comfort. And that's the difficulty about picking a stock in the small cap space in pharma or in upstream. So we continue to look, but we haven't consummated many short-term, small cap and mid cap names. We do have Sun Pharma, we do have Lupin, we do have Glaxo and Sanofi.
So Adrian, I mean, just from a tactical perspective, what is the big India view right now? In the near term, do you see underperformance and earnings lag coming in? Because a lot of experts that we've been talking to are sort of divided. Some of them continue to believe that it'll work for India, providing earnings growth pickup. And some believe that in the near term, it's imperative that the RBI cuts rates, because that's what's not working for India is not the fact that GST hasn't been able to sail through, but the fact that interest rates are pretty high over here. What is that one thing which is the need of the hour when it comes to India macros?
I'm very neutral about the interest rate policy, because when we look at things, you're seeing shoots of recovery in demand, but not a wholesale amount of recovery in demand. It's very difficult to call. I read some literature that says that it will be services led. Some say that it will be private sector led. But we've also seen the public sector push through some increased expenditure as well. So it's very difficult to call. I hesitate to comment on macro and what the government should or should not be doing. I would say that the things that I do find encouraging from the Reserve Bank and from the Finance Ministry and the Modi government the last 12, 18 months is that I like the consistency in message. I like the consistency in policy making. I like the fact that they prioritize what they want to do and they go about trying to execute it. I understand that India is not so easy to execute. I understand that politically it's a big challenge and there will be roadblocks and there will be timelines that get changed and pushed out. That's okay. As long as we know which direction we're going, the pace of the moves I'm more sanguine about. In the meantime, I pick out stock that I think will do well regardless of whether policy will happen within 6 months or 6 years. What is troubling is if policy were inconsistent and were irrational, that would trouble me a lot more.
Adrian, just so good chatting with you, and I'm so glad that, you know, at a time like this, it's so good to hear an India bull, really. Thanks so much for taking the time out and speaking with us.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.